Hello, guys. How we doing tonight? Can I get a quick little sound check and a visual check? Can you guys hear me? See my screen? Awesome, awesome. Well, I hope you all are doing awesome today. We had a little bit of a weird day, but to be expected on my side. Day before trading FOMC, it is to be expected that we see a little bit of slow markets, and I'll define those very quickly. High stand as well. Basically, when I have these days, which as you guys know, I categorize as A days. So I have A plus days, which I want to be trading, high probability trading days, but I also have A days, which to me are also trade worthy. And they aren't perfect though. So for example, we're waiting until very important news tomorrow. We're waiting until FOMC. So the day before, I'm not expecting much. And what does that result as? High resistance conditions, but also lack of correlation between the markets. So basically, right now, if we're talking about future ideas, it will all be confirmed with, well, maybe from the overnight trading, but probably with FOMC. So all we see right now, to put it in simple terms, is bullshit. So we wait until FOMC tells us exactly what it wants to do. On weeks like these, a lot of people like to stay back. I like to still engage with it. Now, the big thing that props to mind is that today ES was very bullish, at least for the start of the day, while NASDAQ could barely go up and not reach those same levels, which now leads to SMT. Right, so there is SMT at the highs. I do want to keep these levels because as we dive down in time frames, we'll be able to notice when the SMT first formed. But my idea for today was still to look for longs off of this inversion fair value gap, the fair value gap that we formed with Friday's candle. And also, as I always say, when we have a volume imbalance next to our fair value gap, I include both together. And as you see from the CE, we had a beautiful reaction right after CE. So not perfectly off CE, but about 10 handles away, which to me is allowable, right? It's that mohawk that we allow for price to get past our specific level. If we go down to the 15-minute, and I just pop up our sessions right here, and I do want to point out previous day high and previous day low. So let's just mark this out as, I don't want it as an objective. So let's mark this out with a vertical line. These are the key levels that we always look for in price, right? Previous day high, previous day low is of importance to us. But there was SMT at this level, as we can see from just looking at ES price action, right? Right now, we are very zoomed out, but if we zoom back in, you'll notice that ES took out that level, right? Previous day high, and we can see, wait, did I have the right high? No, that was the wrong high. All right. Well, I'll get there, guys. There we go. Now that is better. That is actually not even previous day high. I'll get it, guys. Those relative equal highs that we had at previous day high aligned with things that were already taken out on ES, but looking at this level specifically, you can see definitely a lot of divergence in price is what I'm trying to point out, because there are literally 20 SMTs that I could point out specifically in these areas. But the key point is that there is a lot of divergence. Now, the only point where we did not today was, of course, our overnight trading, our London trading, that we trended higher. And then on New York, you can see that near New York open, right, all the way up until that late AM range, we had very little clear movement. We had our first run to the upside, which was framed with SMT at these lows. Where was the specific SMT? I don't think it was 15-minute, but as you can see from this gap, there's clearly lower time frame divergence. When you see one asset retracing into a gap while the other does not, what does that tell you? Well, within this price action, there are lower time frame swing points. So this is actually SMT, just looking one candle that does not have to be a swing point. But I'm not going to call this 15-minute SMT. I'm going to go down to a lower time frame, find my swing point, and then look for that divergence. But the main aspect, the main key point, we had divergence at this level. We had just taken out liquidity also at this point, and of course on NASDAQ, not on ES, which showed that it was a weaker, right? NASDAQ was weaker, ES was stronger today, and reached our higher time frame objective, right? Those previous month's high, that is that level. I am going to add it. Previous month high right here, and let's just do middle right. Took out previous month high while NASDAQ is forming SMT right here. So when was that SMT valid? From this point on, I do just want to place a vertical line. You guys will get it. We're building up to that point. Lastly, we had our high impact news. When 8:30, we had retail sales at 8:30 right here. Now, we spoke a little bit about this, but how do we engage with news when the news doesn't form a clear Judas swing? And there's a reason why I'm on a 15-minute chart here. All right, it's because it's very easy to see intraday price movements and basically utilize this time frame for intraday decisions. When our news does not form a key level, a key Judas swing, sorry, I utilize it as a range, and I want to see both sides of that range taken, right? That is the specific news framework that I'm currently working on providing backtests for, coming soon. But what do we see? Well, we clearly took out the highs, no divergence, but then took out the lows right on the open, right? So that was my first draw. My first draw would have been the lows here, and of course, continuation to closer swing lows into a discount and possibly completing our London framework, right? Because as we know, overnight, if we take out the London highs, which if we look here at this point, these would be London highs, right? 2 to 5 a.m. We took out the London highs. We call this an overnight Judas swing. Expect London lows to be targeted during New York. Beautiful delivery of that, waiting for our higher time frame objective to be met. If you were only looking at NASDAQ, you might have thought, okay, well, it hit previous day high, took out these equal highs, had a hard time. Even if you were looking at the high from Friday last week, you would have seen the same thing, right? We took out that level, but then went back to it. That was not our objective. Our objective was very straightforward. It was previous month high, but you had to form divergence there, right? So at the point where ES took out previous month's high, that was basically your let's go. I'm forgetting the word for it, but it was telling you that you could now start looking for shorts. But if you're trying to short NASDAQ, which is currently the weaker asset, you have to wait for some sort of liquidity sweep. And as I said, I'm staying on the 15-minute here because those are my intraday movements. If I'm expecting a daily reversal, like today, we are going to entirely reverse our move that we have done overnight, right? And return to our key levels, which right now I don't have midnight on my chart because I'm not in historical mode. Give me a second. I do just want to have these levels on my chart. And that should actually be 0. There we go. Sorry. Return to midnight opening price is also what you would have been looking for. You go away. Opening price. There we go. Sorry about that, guys. You have your draw. You have your understanding. And only from that point on do you go lower. There's a reason why I always do it in that basically order. That is how I come to trade ideas. It is not from seeing a lower time frame breaker block, unicorn, and then I try and justify it. No, I have everything I need here. I have my intraday drawn liquidity. I have a London framework telling me to go short. Now, if I was trading specifically from the news, this reaction, along with the divergence, the lower time frame divergence it formed, would have let me too long up until this level is taken out. And as we see from, well, if we go into more precision, maybe, if we go down to the 1 minute and we look at precisely when ES took out that level, I would be looking for longs up until this area. Once previous month high was taken on ES, that is a very important level, I would start looking for shorts. Very specifically, I would need local SMT2. And if we look at this high right here, you can see that ES has been trading above it, but NASDAQ has not. Now, the only thing that happened is that we got some consolidation, we got some accumulation before giving us our short setup. But before we dive into that, I am going to speak on that long setup. If we look, this level right here is our 10 a.m. open. You can see it from this candle. What do you have? Well, very simple. From 9:30, had a small Judah swing higher, taking out liquidity, and then we just engineered liquidity, right? We were very high resistance to that downside, flipping over. So from the point that this breaker block has formed and that it aligns with my higher time frame objective, right? As I said, previous month high. Well, it's that simple. You don't have to go more in depth. It overlaps. Overlapping PD array. Yes, it did not get respected. I didn't know that at the point of my entry. 3 PD array stop loss rule. I have fair value gap. I have inverse fair value gap right here and order block. So my stop is at this low, 25 handles, targeting the opening range, the current high of New York, right? Gives you very easy 2.8 R. Now I say very easy, but as you can see from the delivery, that was a hard one to hold. Does that mean you should have closed it? Not at all. To me, I would have taken a partial in this area if it allowed me to. So for example, we're taking out liquidity at 2R. That's my partial. And then I held through all that bullshit and I got stopped out break even here. That's my trade for me. But if you did have a purely mechanical approach, well, you got 0.8R more, and sometimes you're going to lose, while being conservative would have won you. That's why I don't speak too much on this, just because there is so much variance once we start getting into it. But if you were out of this trade at this point, you could have started considering shorts. As I said, at this level is when previous month high was taken. Now, we did have a lot of consolidation. And again, as I always say, how do you know when it's consolidating? There's divergence at both sides of the range. Now, there wasn't clear SMT on the highs short term, right? There was long term, because as we said, from this point on, previous month high on NASDAQ has not gotten taken out, right? So you have higher time frame divergence on the highs, and you have a bunch of divergence on the lows. Now, I'm just going to point out the most obvious one, but as we keep moving forward, there's a lot of divergence both on highs and on lows. So SMT on both sides of the range equals consolidation. Do I want to be trading consolidation? No, I want to wait for clear raid and then trade that move. Now, since I'm bearish from that point on, this raid, right? You want to frame a raid, close through aggressively, return to a discount of my current range. I can frame this as a range, this as consolidation, accumulation. If you're trading fractal AMDs, right, accumulation, manipulation, distribution, then you would have been looking for this long. But as I explained, and that's why it took so much time at the beginning of this PA review, previous month high being taken means I'm going for shorts now. So I'm looking for a short setup. Did we have a super clean unicorn short setup? After this consolidation, wait for a raid. Your raid is present. You took out your highs. Now you can start looking for shorts. Well, you did not have a unicorn setup form at this specific level. Sadly, it does happen. You have a continuation entry from this point on. Now, I am going to look at it, but you guys have to understand this is not the conservative approach. This is not the easy approach. So if it seems far-fetched to you, understand that it's based off 1 year of trading my specific model. I know it back and forth. I know when to look for continuations, when not to, but I do not recommend it for beginners. From this point on, after you have your clear raid, you're out of this consolidation, you can now expect low resistance conditions. That low resistance led to not forming a breaker block. Now, if I go up a time frame, this will be a 5-minute breaker block, right? Just as this last candle is a 1-minute breaker block. But when we have ran this far away, I'm never going to take this first entry. I'm going to require it to retrace into a premium. Now, this is the one and only time that I will refer to OTE. when looking for a continuation entry, I need price to retrace to OTE. So if we look right here, and I'm actually going to do it with precision, why not? I am going to wait for price to retrace into OTE, respect an inefficiency. So I'm not entering off of that inefficiency. I'm waiting for the respect. What is the respect? Well, I want to see price trade into it, but not invalidate it. More specifically, I give it 2 candles. So for example, in this very specific case, 1 candle respects it, 2nd candle respects it. Okay, I'm good to go. What next? I need a confirmation of order flow, which can come from creating an order block and trading back into it. As you can see right here, if we mark out that opening price, order block bearish, sorry, I'm going to remove these lines because my chart is starting to get a little bit crowded and I want to keep it clean for you guys. Let's just call it 5-minute fair value gap and change that. Oh, sorry. I don't know how your headphones got, but I just hit my mic with my mouse. Apologize for that. So, fair value gap right here. I'm actually going to remove the text from this. Fair value gap, we have OTE at these levels. That is continuation entry. Cool. What do I need then? Confirmation of order flow. So forming an order block, trading back into it, that can be an entry. But the more conservative entry, when I have a nearby fair value gap that we are getting to inverse, is waiting for that inverse fair value gap. And I am anticipating price to want to run away from this as soon as possible. So I'm not waiting for it to trade back into it. Now, as I explained, is this a conservative approach? Not at all. So I'm not even going to place my trade box on there and show you guys because it can be much more simple than that. You had a very nice long, very clear long, 2R, in and out, no stress at all. From that point on, personally, myself, I was super tired. I did not sleep at all because I was working on coding the app. So I took a trade and I got out. I went back to bed. I'm not going to lie to you guys. I was super tired. But if I was to stay in front of my charts, that's my opportunity. And from that point on, I don't see the point in staying in front. Now, if I got stopped out break even, I might look for another opportunity. But my objective has already been met, which means I'm looking for shorts, and this is the specific short I was going to look for. Why? Because I don't recommend trading lunch macros, right? If we look at that 1150 to 1210, which to me is, it can be very consistent, but only in very specific markets. And those very specific, that profiling I'm referring to is when the morning session consolidated, or what you can also frame as search and destroy. So if the morning session was a lot of search and destroy, meaning, right, going to sell side, buy side, sell side, buy side, a little like today, well, then lunch will be expansion instead of consolidation, right? After consolidation comes expansion. That's simple, right? You accumulated orders, you're going to need to make a move out of those orders. So that's when we went for our London low, which is this red line. And then of course we had previous day low below as a final objective. But as you can see, if you took a short here, or even during the lunch macro, which I'm going to draw out for you guys for the curious ones, we have our breaker block right here, overlapping PD array, very straightforward entry. If we look at our stop loss using the 3 PD array rule, you have your fair value gap, you have another fair value gap right here, and the order block. Decently, well, I was going to say a wide stop, but I guess I'm very zoomed in because that's 19 handles. So just very small range day, not the most beautiful up to that point. And as I said, when the AM session consolidates, you're going to expect lunch to expand. And you had nice 4R to London lows, but don't get me wrong, I would have taken a partial definitely at this morning level, especially if I remember correctly, there was SMT at this level, at this point in time. No, not here, perhaps here. I remember we had SMT on the lows somewhere. Oh yeah, London lows. Okay, so I did not mark out London lows on ES. Let me just mark it out right here. London lows, let's frame it as red. As you can see right here, Nasdaq took out London lows, weaker asset to be expected, while ES did not at this point in time, but later decided to invalidate the SMT and continue. So definitely a nice expansion, but as I said, that is not a conservative approach. If you always trade the lunch macro, you'll recognize that it's not very consistent. But if you want to backtest it, I'd say look at the morning session with hindsight, because you already know it's going to be hindsight, right? Because even if I'm looking to trade, it's already 11:50, so I can see the whole of the morning session. If you look left and what you see is consolidation or search and destroy, then expect lunch to be expansion instead of consolidation. You can backtest this if you guys want. I'm going to be honest with you all. To me, it's not worth my time. So for the amount of times that it is in these conditions and it works, I don't want to be spending up until, see, I could have been out of my charts at 10:08. I saved, let me check, 2 hours. So I would have to be on my charts in average probably an hour and a half more than I usually am. I'm usually off my charts by 10:30. On a slower day or a worse day for me where I got a loss early, then I'm going to be on my charts up until 11:10, sometimes 11:30. That is, to me, I have a 2-hour time window maximum. So I don't want to be spending the rest of my time looking at all this. And yes, there was a lunch raid framework in the PM session, but as you can see from the result, nothing interested, and it was to be expected because it's a consolidation day, but we had to go take out liquidity, so we did it during the moment where we aren't supposed to. I guess I'm trying to put easy words for you all to understand. But as I said, lunch macro only when consolidating in the AM session for myself. What's up, Alex? So, do we have any questions? You come to the end, Alex, but with my very heavily drawn chart, we saw that today was a harder day to look at. Yep, tough day. Go for it, Stan. I'm all ears. You can get up here also. If you guys want, by the way, if you don't like talking, typing out your questions, I don't mind you all requesting to come up here and asking your question with your mics. You are welcome to. You better, Alex. You better. Just seeing Stan type. If we expand previous session and sweep liquidity too, is the probability that we ranged high? We sweep previous session and sweep liquidity too. Okay, so let me just trying to put a context around your question. So by previous session, for example, I'm here, New York Open. Let me remove the drawings for now. We've gone over it and there were no questions. And let me actually remove these. What you're saying is if London expands, like we have today, right? London was expansion. Previous session, if you're looking at New York time, which here, you know what? I made an indicator for it. Might as well fucking use it. We are looking at New York time. Yes, yes, I'll make it happen. There we go. We are looking New York Open, New York time right here. Expansion. And then what you meant is we took out liquidity. We were talking about, I forget exactly where it was, but that previous month high. Before I answer this, let me make sure I have your understanding correctly. London expanded and New York hit a key level in liquidity, took out liquidity. All right. I would say no. Because if we're talking purely probabilities, all right, and with the Rice Statistics app coming out soon to the public, I'll definitely be able to back that data up. But for now, you have my word for the next 1 or 2 weeks. Ranging would mean of a lower range than the usual. All right. So if we're talking about average ranges, for example, the average range of the New York morning session, well, ranging markets would be of a smaller range. But usually when people talk about ranging markets, they mean high resistance. So I'm going to answer for both. All right. Purely talking about probabilities, when we are very in expansion, right, we take out a lot of liquidity and we expand through these levels of liquidity. So instead of just, for example, I'm trying to look at an example today, which we did not really have, but here, what did we do with this swing low? The liquidity resting below the opening range low, more specifically, right? 930 to 1030, opening range low. Well, we expanded through it. We used that liquidity as fuel to push us into what we had as London lows and also further liquidity, right? Current daily low and such, and so on. But if we were bullish, we would have swept this and then went on to our higher objective. The previous session to me has no meaning in how we're going to interact with this session's liquidity. It has meaning around the profile. Now, I know I didn't go through the best path to explain that to you guys, but it's all about profiling. So a lot of people will say, well, if this one expands, expect the next one to consolidate, but it does not have to. If our higher time frame objective has not been met, I'm going to anticipate that it's going to keep expanding up until that level. Now, if our higher time frame objective has been met, I'm going to expect a reversal. But for us to reverse, we have to engineer liquidity, and that can lead to sometimes ranging markets. But I do associate today's market specifically with the fact that tomorrow is FOMC. So I went the long way to just tell you that truth is FOMC. But as I started this call, right, today was an A day, not an A plus day. So it was to be expected, a little higher resistance price action pretty much. But as we saw, plenty of opportunities nonetheless. Can't wait to see NQ at all-time highs by next Friday. I would fucking love that. I feel like we're at that point, quarterly, new quarter, we could see a shift to the downside, but data is telling me that we're going to consolidate for the next 2 weeks. So I hope that election year bullishness comes to pass. I want to see it happen. But you posted about it, Alex, so you know. Data is on side for previous month high, no matter what, even on NQ. Who cares about SMT? It doesn't consider it. So definitely hoping to move on for the rest of the week, see it there. All-time highs would be crazy. Everyone is so incredibly bearish, expecting rate cuts to... Oh yeah, that's true. Yeah, I saw a post about that. Everybody predicting my fundamentals are shit, right? I think we talked about it last PA review here. I don't use fundamentals at all. I don't care for them, not because they couldn't help me, but because I don't need them. And time is my most valuable resource at the moment. Yeah, but it's fun to understand though. It's nice to be a well-rounded trader. And if I'm talking to a trader that trades purely based on fundamentals, I'd like to be able to understand them. So hopefully some fundamentalists join this Discord soon so I can learn a tiny bit. Do we have any final questions about the day? But at this point in time, we're in a different environment compared to previous cuts. As I said, I am unfamiliar. I don't even look at the results. I really just look at time and price, as cliche as that now is with ICT. I want to see my specific setup form at this time. If this, and this is present, I have my trade. Okay, you know what? Let's spend some time. Let's talk about the new PD array. All right, where was it? It was yesterday price action. Oh my God, you started me, Alex. You shouldn't have. We were looking at 5-minute chart. Now I am going to go in replay mode so we can forget about today. And ICT was talking about that 245 low. All right. And he was fucking happy saying a bunch of stuff, looking specifically at the 15-minute, if I'm not mistaken. I didn't watch his video. I saw a clip of it. And he looked at the top wick, plotted the quarters as we use, right? When we see a large wick, a large PD array, utilize it in quarters. Then had that CE, but he also fractalized the top part, which I do want to do with a tiny bit of precision. And let's actually look at this and put this one a little bigger. And actually, no, let's just put it solid. I changed the wrong one. Can I please? Can I please? Thank you. And let's just make that solid lines. So he fractalized the top part of that and used it as an array, right? And seeing how price reacts to these levels. Of course, we can go very in-depth about fractal delivery. To me, that is a bullshit attempt where a Goldback would be way better. Now, we're not going to go start talking about that, but here's the truth. ICT is sharing stuff like that because he's an analyst. He always says he wants to learn new stuff. Should you use this new array? I am going to say it. I usually say this is only my opinion, but now it's not a question of opinion. No. Why? This. That's it. Why? Why? Why would you need to use the wick and then fractalize? Exactly, Alex. It is not something I can transfer into logic. I understand. Now, I'm in the 5-minute right now. You guys know I don't use the 5-minute except to look at low-hanging fruit objectives. I would be in the 15-minute here. Intraday movement, intraday price action, 15-minute. What did we just do? Inverse this fair value gap. This is my insight. We can now flip. My new objective is higher. Or new, or maybe predicted, right? We're not going to speak about Monday because not a trading day for myself, but you have your array. It does not seem like it is in a discount. The array is not in the discount, but price retraced to a discount. Did this lag, or is my premium and discount gone? I think I might have done something bad. Yeah, I just saved. Okay, no, there we go. So in a discount, the PD array is not specifically in a discount, but we retrace to a discount. Why would you need to know more? And yes, you can use the quarters of this more specifically, but what value does it add? Precision. Sure, I don't need precision. I need consistency. Would only seem like it appears on NQ. 20ES does not overprint through fair value gaps like that. That's true. That's true. It usually ES is a little bit slower, right? It takes more to form a fair value gap. We can talk for hours about how precise, and I can bring out levels that will be like, oh, look, right here, to the tick reaction. Just like sometimes we have to the tick reactions with very specific arrays. I believe it was last week we went like 2 ticks, or maybe the week before we went like 2 ticks into the daily fair value gap and then had a 500-point reversal. Why? I'm not waiting for a specific level and then you can be like, okay, well, this is the best thing and this is a new thing, and I don't care. I have what works. I don't need more. And so I'm not going to be looking into these stuff. As an analyst, I might take up that new hype from ICT being back in the space, and whenever he speaks about new concepts, I might do a script or two on it. But that is purely marketing based, nothing else. I do want to keep these as straightforward as possible. Cutting through candles mean, well, here, fair value gap, that cut through a candle, right? The fair value gap was formed from, well, this is specifically liquidity, but also closing above candles and all that, just where the fair value gap forms specifically. I'm going to be honest, I did not go in depth into ICT's new PD array. I saw a 20-second clip. So if I'm doing this wrong, I might be, but it was just to showcase the point that I don't care because I don't need it. And that is the example that I'm trying to set for beginners. Now, if you're more advanced and you're doing this as an analyst, have fun, man. There's a lot of stuff to learn. And some stuff might be useful in some very specific cases, some stuff might not. But at the end of the day, if you like learning this type of stuff, it's just from an analyst standpoint and it's fun. Actually, I find it fun. But before I keep rambling for the next 45 minutes, I'm going to ask you guys if you have any final questions, and we're going to call it a night. Extending them out in time. Do you mean like fair value gaps, like utilizing? I'm trying to find a good one. Well, that's a tiny one, but it did work. No, did not trade back into it. So just through time distortion. I want to find a good one. W stream. Oh, thank you. Thank you. Was a slow one tonight. As I told you guys at the beginning, my sleep schedule is all over the place. So I'm a little bit slow these last few days. So bear with me if these PA reviews aren't as active as they usually are. Yeah, dead PA too. Dead PA too. Hopefully with tomorrow, probably more Thursday and Friday, we're going to see some nice delivery. As Alex said, let's bring it to all-time high. Why not? But on that note, I'm going to wish you all a great night. Good luck trading tomorrow. We'll check in for another PA review tomorrow night, so we'll be in here anyways. Y'all have a great night. Good luck trading tomorrow. Goodbye.